What's up, degenerates, perma-bears, investors, retail traders, and everybody alike who might just be getting into the stock market? Welcome back to the only show where tariffs, tech, stocks, and treasury yields collide in a flaming pile of Wall Street confusion. I'm your host, Max Pitts, the only person left not on Powell's speed dial. And here's what the market cooked up this week. The S&P 500 had its best week since 2023, despite a 145% tariff nuke from Trump. Nasdaq went vertical on Wednesday, only to faceplant 24 hours later, and the Dow still cosplaying a roller coaster at Six Flags for the most part. We had consumer sentiment crater, bond yields moonwalk past 4.5%, and Apple dodging tariffs like it's Neo in the Matrix. Welcome to America's next top trade war. So first things first, let's talk about our tariffs here. So with tariffs, we had Trump, and he basically went from the art of deal making to artillery of the dollar. April 2nd, Trump announces reciprocal tariffs and the market tanks. April 10th, he pauses them for 75 countries and the Nasdaq rallies 12%. And then April 11th, surprise, China tariffs are actually 145%, not 125%. And the market slams on the brakes. The result of this, the effective U.S. tariff rate jumped to 27% from 22.5%, according to Yale Budget Lab. That's not a trade policy. That's a Molotov cocktail with a signature pen. Now let's talk bonds, because the 10-year yield spiked to 4.53%, its largest weekly surge since November 2021. Now why did this happen? Because apparently nobody wants our debt now. The dollar dumped, yields popped, and every investor ran for gold like it's 1849 again. Now, the long and the short of it is this isn't volatility. This is economic schizophrenia at its finest. Now, we also have corporate earnings coming this week as well. And CEOs are bringing nothing but vibes and uncertainty at that. Delta Airlines pulled full-year guidance, called the outlook murky. The translation, don't ask, we're flying blind, which is, yeah, that's what you want to hear from an airline. JP Morgan, Diamond says extreme turbulence is ahead. Guesses he's short his own bank. He's probably going to short it. That's pretty crazy. BlackRock's Larry Fink. Clients are anxious and confused. Same, bro. Same. That's how everybody is. So it's not just you, Larry. Now here's the hit list for this week. On Monday, we have Goldman Sachs, First Bank, MT&T, and Pinnacle. Tuesday, we have B of A, Citi, Johnson & Johnson, and United Airlines. Wednesday, we have Abbott, ASML, Progressive, and USB. And then Thursday, we have Netflix, TSM, DR Horton, and United Health. And Friday, the market's closed. Panic privately. Go ahead, do it. Earnings season is officially no guidance season because apparently nobody wants to be held accountable when stocks tank. Yeah, I think that's relatable for all of us, by the way. Now let's go ahead and move over into our favorite segment of the show, where we talk about our options activity from last week. This is sponsored by Investor Central Club. If you want quick, actionable insights that help you digest the market and see where the big players are playing and where the big money is going, then Investor Central Club might be for you. So let's go ahead and kick this off. It looks like we had big money. Big Bud, Menedy. In SPY, we had 1.6 billion in total flow, but 956 million were in puts. And with that, we had our most popular contract for that were the 510s expiring on the 17th this week. Yeah. The Bears are back in town, but with Trump's news that he dropped, that may all change. Nvidia saw 317 million in flow last week with 186 million in calls against 131 million. in puts, and it looks like the AI bros are still in denial. IWM saw 241 million in flow with 23 million in calls against 218 million in puts. It looks like, yeah, still not pretty. Small caps equal big fear. GLD, we saw 187 million in total flow with 173 million coming in calls against 13 million in puts. Gold is officially the doomsday trade again. And then some notable contracts. Again, we had the SPY 517P or 517-405P that had 70,000 contracts printed. That's $18.6 million betting on blood. NVIDIA, we had the $517.90 call, which saw 13.4 million in premiums. One AI Max Bull refused to read the tariff memo, but he might wake up a very rich man on Monday. Some sweeps alerts. We had Meta's on 417, the 460 calls with a $1.3 million sweep. We had Microsoft for 517 $400 calls with a $1.4 million sweep. And then we had Netflix, the 419 $600 call with a $1.2 million block order. Everybody's either hedging the crash or YOLOing the bounce. No in between, just vibes and gamma, my friends. Now, talking about our dark pools here. For SPY, we saw a $905.6 million block at $524. QQQ, we saw a $1.58 billion block at $438.73. That's institutional armor. Apple saw $507 million plus a $437 million. Someone's scooping up that dip. And also worth noting, NVIDIA, no major dark pool flow, but options action is absolutely spicy right now. And GLD, $230 million block. The gold bugs are back and they're buying in bulk. This is what quiet accumulation looks like. Don't let retail Twitter fool you. So here's your cheat sheet for the week ahead. Wednesday, we have retail sales data. Watch for signs of early spending before tariffs wreck Q3. Thursday, Netflix, Taiwan semi-earnings. Critical for tech sentiment. Bad prints equals instant rug pull. And then Friday, we have the market closed. Relax or cry. It depends how much NVIDIA you're still holding. Final take here. You're not crazy. The market is. Keep your stops tight, your charts tighter, and your name folder updated. Subscribe if you like your market news with the extra little sarcasm and less CNBC. And I will see you degenerates tomorrow for our daily recap for Monday. Again, my name is Max Pitts. This is Trades and Gains. See you guys in the next one.